In this presentation, we will process payroll, which will include group life insurance, and compare and contrast this payroll to the prior payrolls which did not have the group life insurance. We will do this within QuickBooks. For more accounting information and accounting courses, visit our website at accountinginstruction.info. Here we are on the home page. We currently have the Open Windows open. In order to open the Open Windows, you go to the View drop down and select the Open Windows list. We're going to say that another month has passed, and we're going to run payroll once again. This time the payroll with that new item, the group life insurance, and therefore we're down here in the employee section. We're going to pay our employee. Pay the employee. We are in the paid payroll version. Therefore, you see the paid payroll version screen. If you're testing this out with a manual free version, then the next screen will look much the same as we in the paid version. Select this pay employees icon here. Then we're going to enter the data into our screen. We are on the month end of July, so 07/31 in 2018. We're going to be paying it in the first day in August. That's just going to be our convention that we have here. We're running the payroll every month, and we are paying it on the next day. So this should be 2018. And so we're just on July. This was going to be run for the month of July. We're going to pay it on August. Note that timing difference. We're pointing out that timing difference in these presentations as we run the payroll and the quarterly payrolls. It will be on a cash basis when we enter the data into the quarterly payrolls, not on an accrual basis as we do so. So that on an accrual basis, we're running this for the month here of July, and it's going into August will be the month that it's going to be processed within the payroll report. We're going to go ahead and check off our one employee. Everything else is much the same as prior presentations. So we're going to say Anthony Moore, click on what we have. We have the same number of hours, the same overtime, all the same information here. The new thing that we have added now, if we scroll down to this side, we've got the new group life insurance. That's what we've added this time. So where is that over here? We can see that it's going to be included on this side, meaning it's the employer portion, not the employee portion. Because our new item is over here, it's being paid by the employer. It's not included in gross pay, and therefore it's not affecting the gross pay. However, there is still an effect on the taxes, and it's not going to be on the federal income tax. It's not going to be included in federal income tax, but there is an effect on Social Security and Medicare. So that's going to be the unusual thing. Usually these taxes are going to be by default calculated based on gross pay. With the federal income tax is reduced by a few things we've seen, including the 401k that wasn't included there. Now these ones are not, this particular item, the group life insurance, is not included in gross pay at all, but still has to be taken into consideration when considering the Social Security and Medicare. So let's take a look at that. We're going to say that we had the 4025 plus the 37.5, that's the gross pay. And then in a prior presentation, we said we had this pre-tax amount, which was reducing the gross pay for the Social Security and Medicare, so minus 25. And then what we have here, we have to add back to it this 200. So the 200 then, with regards to Social Security and Medicare, is going to be taxable. So it's not up in this number because this is really the number that's kind of used for federal income tax primarily. So it's not included in that gross pay, but it's going to be increased because these secondary taxes are needed in the calculation to calculate it. So we're going to add back the 200 and then multiply times the rate of 0.062. And that's going to give us this 262.73. Similar type of calculation can be made for the Medicare. So this is a strange one here in terms of the tax effect that's going to happen on the group life insurance. Not included in the gross pay at all. These numbers really are the FIT, federal income tax gross pay, for the most part here, and then they're showing you what's going to be reduced from federal income tax in this withholding amount, and these amounts that are going to be reducing the federal income tax, including the 401k. This item over here, this 200, not included because it's not going to be taxable for gross pay, so it's not included in this amount at all. It's paid by the employer, but it is something that's going to be taxable for Social Security and Medicare. So we have to add it back in for that type of taxation. So we're getting kind of a long list of benefits here. We could see that the gross pay, we got the 401k for the employee, the dental insurance taxable, the vision, which was pre-tax, then the federal withholdings is going to be standard for, and then the Social Security, Medicare, we're in the state of California, the California taxes. And then the employer is paying over and above the gross pay. This is all included in gross pay. The 401k that's being matched, the health insurance, the group life insurance now, and the Social Security and Medicare, which is going to match, same type of calculation for this side of the Social Security and Medicare. And then there's no FUTA or SUTA because we've hit the cap. So we're going to go ahead and save and close this. We're going to process this. We're going to continue and process the payroll. Dates look good. Everything looks good. We're going to say create the paycheck. So once the paycheck is created, we'll take a look and print the pay stub. And let's preview the pay stub. So here's the current data we have, and we can see that the new item, the group life insurance, is over here. It's included as taxable company item. So taxable for the company, not included in the gross pay at all. So this is another item over here where we have the gross pay. We've got the 401k and the vision insurance, which are decreasing gross pay for either or both. The FIT, federal income tax for the employee, and or the Social Security, which are why these items are up top. And then we've got the taxes that are going to be pulled out for the employee taxes. And then we have the dental down here, which is pulled out of the check, but not reducing the employee taxes in any way. It's just something that we're paying, possibly getting a group benefit from. And then we have these items here, which are basically over and above. We're saying, hey, the company is paying these for you, and they're not being included in gross pay at all, and therefore not being included in taxes either. So these are really kind of increases to salary in a way that aren't actually in the salary number, because that's one way to not have to pay the tax. We're really reporting this basically for payroll taxes. Okay, so we're going to close this back out. We're going to close this back out, close this back out. Take a look at the check register, go into the banking dropdown and use register. Checking accounts, what we want, and we see the next check that we have here for 8/1, the next item. So we can see the actual dollar amount is less than the prior paycheck, the only difference being that life insurance, which was actually a benefit. It was a $200 increase to the benefit that will be paid by the employer, not included in gross pay, but it did include the taxes increased on Social Security and Medicare. So there was actually a $200 increase, but it wasn't included in gross pay, and it's obviously not reflected in the paycheck, which result in increases in taxes, not to federal income tax, but to the Social Security and Medicare tax. If we were to open this up, we can compare those two by going to the paycheck detail and checking out what exactly is making up that net check. For more accounting information and accounting courses, visit our website at accountinginstruction.info.